leading to the point, okay, so the angel community has sort of stepped into that void. Still, there's some seed venture people that are, dealing at that void or in that area as well. Can, I was thinking of the musical Cowboys and Oklahoma, and they had that song about the cowboys and the farmers. Can angels and VCs be friends? Because the traditional model was, okay, the angels went in, and then the VCs would come in and crush the angels. So, and this I'm leading to you, Jim, to get your response on this. Can angels and VCs be friends, and how do they work together, or do they work at all?
You're right. There is sort of a concept out there that angel investors will be the silly first money in, and then when the company needs a bigger chunk, the venture guys, the Sand Hill Road guys, will come and cram them down, and for all that risk they took, they won't get much reward. But I also think this goes back a little bit to something that Kanth mentioned during his presentation, is companies need to think about what level of capital they need to raise and what's the right source for that and where they go with it. And so the business that only needs to raise $1 million or $2 million really is probably an angel-funded company, not often an angel or a venture-funded company. And on the other end of the spectrum, the company that's going to be very capital intensive, that needs to raise tens of millions of dollars, is really not, for most at least reasonably savvy angels, a very good investment, because they know that the later money in is going to come and basically whack them, or at least there's the potential to be whacked. And so, to some extent, angels will self-select. They will look for businesses to fund that are capital efficient, that won't need to raise a lot of money, and that don't need to then go do a $50 million later round and put them in a position where they can be crushed. And so I think particularly in Oregon, the kinds of businesses that have attracted angel investors are businesses like Monsoon, that for $1 million or $2 million can really have the opportunity to be cash flow positive, create a large business that's scalable, and be very capital efficient with it.
The reason that people get sort of crammed down is because the business wasn't performing, or something had gone off the rails. And so, and I don't care whether it's an angel led syndicate or a VC led syndicate, if it goes off the rails and all of a sudden, your valuation is way more than really the results have justified, then there's going to be some correction. So, but what's interesting is right now down in Silicon Valley, the mentality is not at all, toward sort of punishing your co-investors. In fact, the many angel-led investments, there's like a waiting list to get into them from the VCs. So I think that the tables right now have changed, and it's because it's so easy to get the initial traction. And really, what it really comes down to is like these early stage companies. A startup is really just a company in search of its business model. And as Kanth was saying, it's like you want to find a repeatable, scalable model, and you really shouldn't raise a lot of money, and you really shouldn't hire a lot of people until you've really found that. And once you found it, now you can actually scale the business. But until that point, that's the perfect spot for angels and small seed funds and small early stage VCs, and I think that's kind of how the market has bifurcated.
Yeah, you sort of get this list of potential alternatives, and we've talked today about private equity, venture capital, seed venture capital, angel. How does a company decide what of those resources that you should pursue?
All the later stage types of funding sources are just not an option. It's friends and family. It's maybe early stage angels who might have an interest in your industry, or might know something about. You got to. I think it was Kanth that was saying, like, the angels, are typically former entrepreneurs and themselves, and so they've got a risk tolerance that's probably, and they know something about the industry, so they're going to be willing to take a bet on you. And those are the kinds of investors you need to find, is people that know something about what you're doing, so that they can both add value, and they'll be able to figure out in their own minds what that risk-return profile is, and so they can take their own leap of faith.
From my perspective, it comes back to, you as an entrepreneur really need to decide what your end game is. What do you want out of this? And that really determines your source of funding. A lot of people say, I need 5 million. And you need to ask yourself, so if it's 5 million, you're going to a VC, what's going to be your equity stake at the end of the day? So you could sell a company for $200 million, and if you own 10% of it, you make 20 million. Or you could, own 80% of a company and sell it for $50 million, and you make 40 million. Right? So, what do you want, and what's the path you want to take? And money isn't the only thing. There are other factors which go into it. But I think people, before they set out to raise money, just put down on a piece of paper, what is it you're looking for at the end of all of this? Why are you starting the company? What's your goal with the company? And where do you want to be 10 years from now? What do you want to be doing? And I think that has a key bearing. And then after that, once you've determined that, then be persistent on that path. But a lot of people just go and say, I'm going to take money. And so they take money wherever they can get it, which isn't necessarily the smartest way to go about it.
Just also from an angel perspective, that don't go start to raise money until you actually have a plan, not only your personal plan. And by plan, I don't mean, monthly forecast for the next 3 years, because it's either lucky or wrong, but either way, it's not very valuable. But a simple 2 or 3 page, what is this business going to look like in 5 years if we're successful? What are the big milestones I need to get there? Who are we selling to and why are they buying it? Basic stuff like this. Tell me what this business looks like from a global perspective, and so I can understand what kind of financing you need and how much you might need. We're not going to decide right now whether you need 2 million or 4 million over the next 5 years, but we can decide if you're going to need 2 million or 50 million based on where you think you're going to go.
Where do people go to get help? Because this, being investor ready, I think Kanth talked about that. Part of it is, of course, getting angels educated as well, but where's the company go for help?
There are lots of resources. Kanth mentioned some of them. You mentioned some of them earlier. Both OEN, statewide, Oregon Entrepreneurs Network, and Ben BDC run a variety of programs. OEN runs something like 100 programs or 120 programs a year, both aimed at helping entrepreneurs understand what investors are looking for and helping investors, those people who perhaps want to be angel investors but haven't been, learn how the process works. And so there's a co-education process. But OEN's a good place for education. There are some some angel groups, particularly in the Portland area. The Portland Seed Fund was mentioned, very new, very, very early stage. It's doing $25,000 to $50,000 investments. That's its model. So that's a substitute angel. Oregon Angel Fund is a somewhat larger fund. They're typically looking to put in $half to $750,000 in a round that they will lead. That's probably more than $1 million or $1.5 million. So it's sort of the next step up. That's really not startup financing. That's after the company's got a little more traction. But there are a variety of places to go. But educate yourself. Network. Kanth indicated that. Get out there and talk to people about their experiences. Get out, talk to angels conceptually about what they're looking for before you ever talk to them about your business.
And just one more thing to add to that, and this goes back to something Art was mentioning too. In addition to your bankers, and here I'm going to make a plug for our sponsors, talk to your attorneys as well. Your attorneys, your accountants. For me, my law firm was incredibly helpful in helping me find angels and just working me through the whole process. So I would definitely say, talk to all your service providers because they can be a lot of help to you.
The last 12 years I was in the Seattle area where there is more venture capital and more companies started. And part of it's the university system that you mentioned earlier. The other part is Microsoft and Amazon and a few others that spawned so much and created so much wealth. But I don't think the educational programs were any better in Seattle than Oregon, and probably not as well developed. I think the cooperative nature of Oregon and the pull-together attitude is pretty incredible, and is something that's out there for free and to take advantage of. And I just wanted to plug one event that's coming up. It's an OEN-sponsored event in the Dalles on October 8th. It's called How and Why to Seek Angel Investment. It's in the Dalles. I don't think there's any restriction if you wanted to drive up there and spend a day in that kind of an event. It's a great use of your time if that's the kind of capital that you're looking for.
With respect to your question about what do entrepreneurs need to do, OEN has two particular programs. One called the Business Concept Review, which literally you basically bring in your half-page concept and a couple of people that have some experience in that industry sector as angel investors will spend a couple hours with you walking through it and basically poking at it. And if you decide you still want to keep going after that, you can go develop a business plan and get the same kind of expert review, all for basically a nominal price of being an OEN member. You can get some real clear feedback on your plan from people that are in the pool of the kind of investors that you might want to approach before you ever go start actually pitching. There are really, really inexpensive, high-quality programs available if you just take a little bit of time to find them.